Hey, welcome back to YT Finance, and today we are talking about Workhorse stock news, specifically their earnings call, Workhorse receiving new orders for their vehicles, and what Workhorse Group's management said about their future operations. Remember to like this video right now, subscribe if you are new, if you are already subscribed, thank you so much, you're the best, and comment down below what you think of Workhorse stock rallying. Throughout this video, we will dive into Workhorse's financials, and we will compare this quarter's financial performance to Workhorse Group's past quarters so we can see a historical trend of improvements. We will also talk about Workhorse's stock jumping up in price and what this could mean for the future of Workhorse stock. And without further ado, let's jump into our first article. So here are some Workhorse news updates and highlights from their earnings call. Workhorse is expected to make 1,800 vehicles in 2021, which is not that impressive, especially if they get the USPS contract, which needs well over 100,000 vehicles in the upcoming years, but more on the USPS contract later. It was also announced that an automotive company ordered 500 of Workhorse's C1000 vehicles, and that Workhorse has $260 million in cash on their balance sheet. And we all know this was from their new financing, and it was not due to their profit or revenue, because so far Workhorse has not had any profits. Luckily, Workhorse has a 10% stake in Lordstown Motors, which on November 6th, Workhorse's 10% stake was worth $285 million, even though Lordstown Motors stock has been down lately. Workhorse has also continued their partnership with Hitachi to enhance Workhorse's production capabilities and efficiencies. This includes supply chain optimization and vehicle financing for dealers and suppliers. And last but not least, Workhorse has had vehicle sales from Fluid Systems and eTrucks. Workhorse's management says, and I quote, "Our strategic partnership approach to engaging with dealerships has paid off very quickly, as evidenced by our recent 500 truck order from Pritchard Auto Company that will be financed by HCA, which is Hitachi." Workhorse's chief executive officer goes on to say, "We believe this initial sale is just the start of this channel's growth. We were also encouraged by the results of a positive dealer survey administered by HCA that looked favorably on the long-term prospects of the EV delivery truck market, and in particular, Workhorse within that ecosystem." He goes on to say, "Previously we projected 300 to 400 vehicles to be produced by the end of 2020, mostly in the fourth quarter. Although we will still manufacture and deliver vehicles in quarter 4, it will be a substantially lower amount than our previous guidance. We are unable to give a specific estimate for the following reasons." The first reason is that Workhorse's suppliers, particularly their battery supplier, lowered their overall volume because of the illness. Secondly, 36% of Workhorse's already small workforce has either been infected or quarantined because of the illness, which has impacted production negatively as well. The Workhorse CEO then adds to say this: "We view this only as a delay in our progress. We have introduced several new battery supplier options into our supply chain and will have supplemental volume additions in the first quarter of 2021. While we cannot predict the full impact from COVID right now, let alone in 2021, when conditions improve and the coronavirus is no longer a business issue for us and our suppliers, then we would anticipate producing approximately 1,800 units in 2021. Now that the CEO explained why Workhorse has been behind on production, let's look at their financials, which have always been bad, but there is good news too. Listen to this. Workhorse's quarter 3 sales were $564,700, which trumps what they made last year in the same quarter, which was only $4,000. But their cost of goods sold also increased, which is natural because they were producing more, so the cost of goods sold also went up from $1.4 million to $2.8 million, mainly because of their C-Series vehicles' material costs. Their general expenses also more than doubled from $2.6 million to $6 million because of consulting expenses from Hitachi and employee-related costs, but research and development stayed stable with no increase or decrease year-to-date for the same quarter. Sadly, their interest expense also went up from $5.9 million to $74.3 million, which is a huge spike. Also, operating income has a loss of $9.8 million compared to $5.6 million for the same quarter in 2019. Now, as production increases, expenses will naturally increase as well, but they should be outweighed by the increase in revenue, which is not happening here. And if you like finance like I do, here is a quick snapshot of their balance sheets. Not everything is on here. This is a consolidated balance sheet, but just in case you want to see the numbers for yourself, here they are. Now, again, this does not mean that Workhorse is a bad stock. We cannot use fundamentals to help justify a speculative investment. The whole point of Workhorse is that it has future potential to become a very, very successful stock. So we cannot use things such as fundamentals and financials to dictate where the stock's going to be in the future as of right now. Now, of course, their financials should help a lot, and I really wish they had great financials, but as of right now, that is just not a reality. So let's dive deeper into their actual earnings. After earnings, Workhorse's stock popped up 10%, which I am not only shocked that it rose, it actually made me worried because they did not do well, yet somehow the stock rallied. Now, the earnings were leagues better than their last quarter 2 earnings, but Workhorse did not even meet their expectations for this time around for quarter 3. This rally was most likely due to Workhorse shattering their projected revenue estimate by 41%, which gave them a total annual increase in revenue of 14,000%. As I mentioned earlier, Workhorse's expenses will rise as their revenue increases, and as of right now, their expenses are still much greater than their revenue for the time being, but Workhorse is still on track to start making profits by the end of 2022. Their cash has also increased tremendously in this quarter, but that is because of their financing from institutional investors, which will definitely help Workhorse increase their production in the long term. But as we can see from this graph, Workhorse's earnings still came up short, which was surprising to me because normally Workhorse meets their earnings forecasts apart from a couple of really bad quarters like their second quarter in 2020. For this rally, we should think, is the increase in revenue, which is still lower than their expenses, on top of failed earnings expectations, really a call for a rally? Well, I guess it is. I even predicted that any good Workhorse news could cause the stock to rally, but I was not in any way expecting something like this. As December draws closer, Workhorse stock is set to rally even higher, but make sure you do not get caught up in the hype. Manage your risk, put stop losses on your investments, and be patient. The moment right before and close soon after the USPS contract winners are released could be the best moments to make your endgame moves if you do not plan to hold Workhorse stock for the long term. Workhorse did not really mention anything about the USPS contract in the earnings call, but I would still hold to the fact that they are a leading contender for the USPS contract. Here is a snapshot of Workhorse's stock, and I want you all to remember how this looks now, because in December it will skyrocket as the FOMO, which is the fear of missing out, sets in on investors. Remember to like this video, comment down below your Workhorse stock price predictions. Thank you so much for watching the video all the way to this point, and that is all I have for you today. I will see you in the next YT video.